Hey guys, welcome back. In today's video, we are talking about AMC going wild, the squeeze setups, short margin issues, and many more in this video. First, taking a look at this. AMC went wild Friday, 56 million shares traded. Here's why. 174,000 plus call options were bought, Taylor Swift event announced, analyst upgrade, meme stock DNA equals FOMO plus shorts covering, and that's what we saw. So Friday, we saw AMC go up 6%, and we saw it end at 301, which was above the max pain. Now, one thing that I want to talk about is, and I still remain up with this view, which was, I personally believe that when we do talk about this Taylor Swift event, which was obviously very, very big, especially with what I want to talk about later on in this video, I do think that that wasn't the sole reason. Plenty of people want to buy into AMC because of how undervalued it is, because of how much potential it is, and they know what the real worth should be. And so whilst the Taylor Swift event was obviously big, I think what it means for AMC and what all these other factors we've mentioned were ultimately the reason. But it's also a big thing, which is I don't want people to not to realize is that this is also short showing weaknesses. I don't want people to just to focus on this Taylor Swift event. Like I said, it is very, very big, but the very fact we are able to beat these short sellers when we are going above max pain, that should also be something to talk about as opposed to just the Taylor Swift event. And so that's the focus I want to look at here. But you can understand how AMC is doing right now and how much attraction it's obviously having. Another thing is you can see AMC 2021 setup before the squeeze compared to today's setup seems awfully familiar. So when you take a look at the comparison about AMC, and you can take a look at what happened in the past and then where we are right now, it obviously looks very familiar. And we've sort of talked about this in the past in terms of plenty of times you should use data to come up with an idea of what's going on. And so in the past, if we're seeing that this data is representing, investors coming in, investors piling in, which we've also known that's obviously happening, but also just showing how this is typically the bouncing point. This is typically where people want to buy as much AMC as possible, which will lead to a massive volume coming in, another big surge of volume coming in and taking AMC higher. Then that's something that we need to obviously take into consideration. And so right now we obviously have that. And the reason why I want to mention this is because it isn't just this particular technical analysis that we are focusing on. I've said on this channel plenty of times before, technical analysis, whilst is very, very useful, when it comes to a stock like AMC, which is heavily manipulated, it doesn't help us much apart from the fact we know where people want to accumulate. But now, with everything that we've just said, with what AMC is going to do, with what AMC is doing, like we've said, there is plenty of factors that's leading towards the fact that AMC is going to have a massive breakout. It isn't just the technical analysis, but it's also talking about how much institutions want to accumulate, how much the short sellers are panicking right now as the liquidity is getting drained. And so those are the ultimate reasons that we are obviously looking out for. So now let's talk about why we've said that the Taylor Swift event is more than just what's on the surface. So firstly, you can see Taylor Swift is once again bypassing Hollywood studios, partnering directly with AMC theaters to release her Life of a Show Go. This is what we talked about. Her last theatrical release was among the most profitable films of 2023 for theaters. So firstly, it's talk about the impact in which Taylor Swift obviously has. And when she released something like this, how much benefit that's going to bring, not only to the box office and how that affects AMC, but the direct relationship with AMC as well. Because if you take a look at this, we can see is that deadline here is that unlike the Eras Tours, which was pitched by the Swifts to the motion picture studio before AMC won out, the family called up the #1 circus boss Adam Aaron directly in late August about Shogo, which they already had in the works. So this is what's very, very important. Firstly, it's about the fact that once again, we've seen how well it's done. And you can see Eras Tour did a net profit of 172 million. And what that means with not only the box office, like I said, but also AMC film distribution. And that's the most important part. Because now we're seeing that people like Taylor Swift, they're not going to any other distributions, they're not going to any other networks, but they're going directly straight towards Adam Aaron, the AMC film distribution. This is something that they've obviously mentioned here. And so this is what we've said about how it directly benefits AMC, because AMC made a new revenue structure, their film distribution, and it's now getting the impact it should be getting. It's now getting the recognition that we obviously talked about in the past. And so this is obviously an example. And now with this, with the fact that Taylor Swift is going directly to Adam Aaron, directly to AMC about film releases like this, I do believe that this will be the beginning of many, many others. We're going to be seeing not just, of course, artists doing this, but potentially we're going to be looking at other major films going towards the network. This is obviously the start of something very, very big. Now, we have to understand this is obviously something that needs to be grown, and it is not just going to, become huge overnight. But the very fact we are seeing successes like this is already giving us indications of what is going to happen. And so with this, you can also understand how well AMC is doing and why people obviously want to invest into AMC. And now if we take a look at the overall macro economy, before going further into the shorts lacking, you can see firstly, US layoffs are rising at a crisis pace where we've announced 85,000 job cuts in August, the highest since 2020 crisis. And so this is what we are looking at in the market right now. Now, this is obviously something that we obviously don't wish for. We don't want unemployment to go up. We don't want things like this to happen. But the very fact it has happened, we obviously don't have any control over it. It's showing what's happening in the market right now. It's showing what's happening within the economy. Now, something that we've talked about in the past is actually during a recession, what we are likely to see is that stocks like AMC are going to perform better because their business structures won't be heavily impacted, unlike the others. And so this is obviously the first indication of not only what we're looking to look out for in the market as we see potentially a recession, a market crash, therefore meaning all these collaterals of these short sellers are going to evaporate, but also how is AMC going to navigate themselves within the recession and with the data we've seen in the past, unless we obviously see a lockdown, which is very different from a market recession in the sense we're talking about. We are actually going to be seeing AMC standing strong. And that's another reason why we talked about of how investors are realizing AMC is a golden investment, not just because of how undervalued it is and how much return they could get, but also just how much of a safe haven it is during any difficult times that will come up in the future. Another thing is looking at the market right now. You can see massive coverage, a record 5.3 trillion of notional options exposure will expire today, including 3 trillion of SPX options and 935 billion notional of single stock options. Now, in the simplest term, in terms of what this means, is we are going to be seeing volatility. The full expiration date was 19th of September. And then you can coincidentally see why we talked about AMC going up above max pain wasn't just the fact it was Taylor Swift. There was multiple signs showing that it was also because short sellers aren't able to suppress AMC. And of course, this is one of the reasons. As we're seeing volatility, as we're seeing the market become, very volatile, we're seeing these short sellers failing to keep control of their usual positions, of their usual algorithms, and we are very likely to see this volatility continue. Another thing on top of this is obviously the margin issues that we've talked about. US margin debt jumped plus 37 billion in August to a record 1.06 trillion. Over the last 3 months, margin debt has surged $139 billion. And so we have to understand is that the current market is, of course, very, very bad right now, especially when we talk about how overexposed certain institutions are. Now, last video, we talked about UBS, and in terms of talking about how they took a massive liquidity hit, and that was already the signs of how AMC and GME swaps is eating into these institutions, is having a major effect. And again, they will have a bigger effect offshore because it's happening in countries, it's happening in regions where they actually take naked short selling very, very serious. But also, we talked about the Citadel yen carry trade and how that's obviously raising concerns and how that's going to eat up into liquidity. And so when we see these margin depth going up, we have to understand that as we see the margin depth going up, we're seeing how the shorts are getting more and more worried. When you factor that in with how little liquidity they have from other places, and you talk about how much risk exposure that they have, you start to understand everything that is about to happen. And so it's why we've said, AMC is, of course, the safe haven right now when we see things like this, because this margin depth won't affect AMC at all but it would affect the institutions that's shorting AMC. When we talk about these options that is expiring, that having massive exposure to the market, once again, it will affect these financial institutions, but it won't affect AMC. And so this is why we've said AMC is putting himself in a very, very strong position. Now, as always, not to ever financial advice, so do take with a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.